Hello everyone. In previous lecture, I was talking about partnership. In this lecture, we will be discussing about partner's capital account. So let's start. There are two methods of preparing partner's capital account. First one is fluctuating capital method and second one is fixed capital method. Let's start with fluctuating capital method. Under this method, all transactions related to interest on drawings, loan, profit and loss account, salaries of partner are recorded in only one account. As a result, the balance of capital keeps on fluctuating. Let's move on to the partner's capital account under fluctuating capital method. As we can see from the table, there are two sides of the account, that is debit and credit side. As the capital is liability of the business, its opening balance will be on credit side, that is by balance brought down. Moving on to any additional capital brought in by the partner, it will be written as by cash or bank account, by interest on capital, by salary, by commission, and at last, in case of profit, the share of profit will be written on buy side as P&L appropriation account. That increases the balance of capital account is on credit side, and anything which decreases the balance of capital account remains on left side. So we will write drawings on two side, interest on drawings, profit and loss appropriation account, that is the share of loss of a partner, and at last we will get balance carried down, that is the closing balance of capital, as balance carried down, which is balancing figure. Moving on to fixed capital method, that is under this method for each partner two accounts, that is capital and current account, are prepared. The transactions related to contribution and withdrawal of capital are recorded in capital account and other transactions are recorded in current account. Capital account shows same balance from year to year unless some amount of capital is contributed or withdrawn, while the balance of current account fluctuates. Let's talk about partner's capital account in fixed capital method, that is by balance brought down as opening balance, and in case of any additional capital brought in by the partner, it will be written on buy side, and in case of any withdrawals or drawings, it will be written on to side, that is to cash or bank account. Again, to balance carried down will be the balancing figure of the partner's capital account. Under fixed method, only additional capital and withdrawals are treated, and for recording salaries, interest, commission, and profit and loss appropriation account, a separate account will be opened. That account is known as partner's current account. Unlike capital account, current account may have a debit balance also. So in case of debit balance, we will write to balance brought down, and in case of credit balance, we will write by balance brought down, that is credit balance. Again, by interest on capital, by salary, by P&L appropriation account, as mentioned earlier as share of profit, and on two side, drawings, interest on drawings, P&L appropriation account, that is his share of loss, and at the end, if in case the balance is by balance brought down, we will write to balance carried down, and in case of to balance brought down, it can be by balance carried down. Now let's move to the question which was given in our previous video, that is Allen and Bravo entered into partnership contributing $2 lakh and $3 lakh respectively, and their profit sharing ratio was 3:2. Bravo is to be allowed a salary of $600 per month with effect from 1st March. Interest on capital is to be allowed at 10% per annum. 5% interest is to be charged on drawings, and during the year Allen withdrew $12,000 and Bravo $20,000. Interest being Allen $200 and Bravo $400. Allen further introduced 1 lakh as capital on 30th June. Profit in 2010 before making any of the above adjustments was $96,000. Show how the profit is to be distributed. Show capital accounts if they are fixed and if they are not fixed, that is fluctuating. Now moving to the solution, when capital is fixed, we are supposed to make two accounts, one for Allen and another one for Bravo. Now starting with Allen's capital account, it will start with by cash account 2 lakh, that is capital contributed by him. And on 30th of June, he again contributed additional capital, that is $1 lakh. Now, on the to side, we are supposed to write 31st of December 2016, to balance carried down $3 lakh. Now, moving on to his current account, that is Alan's current account, it will start with buy side, that is interest on capital, $25,000. Now, how did we calculate interest on capital? As we have seen in the question, interest on capital is to be allowed at 10% per annum. So we will calculate it as 2 lakh multiplied by 10% for 1 year, that becomes $20,000, and 1 lakh multiplied by 10% into 6 divided by 12, that becomes $5,000. So interest on capital is $25,000. And P&L appropriation account, that is the share of his profit, as calculated in the previous video, that is $21,360. So moving to the to side, that is two drawings, $12,000 as given in the question, and two interest on drawings, 200 again given in the question, and we will write to balance carried down, that is balancing figure, as $34,160. Now moving on to Bravo's capital account, we will write by cash account $3 lakh and 2 balanced carried down, that is balancing figure, as $3 lakh. Now moving on to his current account, we will write on buy side interest on capital 30,000, that is 3 lakh multiplied by 10% multiplied by 12 divided by 12, and P&L appropriation account, that is his share of profit, $14,240. Moving to the to side, that is two drawings, $20,000 as given in the question, and two interest on drawings again given in the question, that is $400. So the balance will be two balance carried down, $23,840. And next part of this question is we are supposed to show capital accounts when they are fluctuating. Now as we know, in this case there will be only one account for both of them, that is Alan's capital account and Bravo's capital account. Now let's start with Alan's capital account. By cash account 2 lakh, by cash account, that is further capital, 1 lakh, by interest on capital $25,000, by P&L appropriation, that is $21,360. Now moving on to to side, that is two drawings, $12,000, interest on drawings $200, and two balanced carried down, that is balancing figure, $3,34,160. Now moving on to Bravo's capital account, we will write by cash account $3 lakh, by interest on capital $30,000, by salary as $6,000. Now how did we calculate the salary? He was entitled to get $600 per month from 1st of March. So it becomes 10 months. So 600 multiplied by 10 is equal to $6,000. Now by P&L appropriation account, again that is $14,240. Moving on to to side, that is two drawings, $20,000, two interest on drawings, $400, two balance carried down, that is $3,29,840. Again, this is a balancing figure. Thank you.